Hi, welcome to the Market Alert for Wednesday, the 20th of May 2020. So yesterday, the UK changing claimant count unemployment came out at a staggering and eye-watering 856,000 job losses. And unfortunately, this is just the tip of the iceberg. As the economy tries to get going, a lot of businesses will realise it's not actually worth reopening, particularly the hospitality sector, i.e. pubs, restaurants, etc. At least 50% of those will not open their doors again because of the costs, the rental arrears, etc. So yeah, this is really bad news, and this is all predicated on Neil Ferguson's modelling of how the coronavirus would spread, and helped in a huge part to get us all locked down. So yeah, this is how the economy has panned out over 1 month of a lockdown, and of course it's still in there at the moment. A lot of businesses are still not reopened, so this is just going to get worse. And then they come out with statements like this, Sunak warns of recession like we've never seen before. I mean, really, do these people that hold these positions, they render me speechless. They really do. You know, you shut down the global economy, and then you wonder why we end up with the greatest depression, not recession, on record. No surprise whatsoever if you've watched the Market Alert for the last 10 years, and also no surprise that the money printing is now off the charts, as we've seen in the last few weeks. And more on this later in the week. But there is a silver lining, no pun intended. But yesterday we saw the price of silver over the last few weeks. Actually, we've seen the price of silver moving higher. And if you go back to my previous videos that I did on the end of the financial road, where I said that silver was the most undervalued asset on the planet and well worth owning, then you will see why as we go through. It says here, silver joins the party. Although the silver-gold ratio has fallen, the white metal remains historically inexpensive compared to gold. We still effectively have silver on sale. And that's what it means. What it means by on sale doesn't mean it's available. Trying to get hold of physical silver now is near impossible. Even the Royal Mint in the UK has no longer got any silver Britannia coins. So it's still cheap at the moment, and I'll show you why. I will get to the Dow in a moment, but I'll just continue down this line at the moment. Let's just remind ourselves of the gold-silver ratio. You will see that it's 125. That's 125 ounces of silver to 1 ounce of gold, as you can see here. And this means that the best way to actually trade this, and get my teeth in, is to have actually bought silver, because once the ratio moves back, and I did an average yesterday afternoon, I was just playing around, and it comes around 50. So the acceleration in the price of silver to the upside is going to be quite interesting, to say the least. And let's just have a look at this. This is the daily chart, and all of these lines you can see are on here is where I just keep buying in as the market pulls back. I'm spread betting. I own physical silver and other funds as well, because it is the most undervalued asset on the planet. And I alluded to this even 2 years ago, and actually it's longer than that, 2016. And the accumulation of silver over this period of the last 10 years is knowing full well that eventually the whole system fails, and you need real assets, and you need to be your own central bank. And that's what I've been advocating since 2011 when I wrote the book, The Tipping Point. So this is the daily chart of silver. And if you're thinking, well, I may have missed the boat, well, absolutely not. Let's just convert this into a monthly chart, and now you can see what we've got here. We haven't even started yet. You can see the high there of $50. We're currently down at 17, so we've got a long way to go on this. And what I'll do is, just as the market moves higher, silver is incredibly volatile though. I'm going to give you a heads up. As you can see here, the market dropped, But as now we've had that final shakeout, then I'll just keep buying on the pullbacks as the market makes its way up and accumulate to the all-time high. And I have absolutely no doubts we're going through the all-time high. This is the second time the market's hit $50 an ounce. It hit $50 an ounce when the Bunker Hunt brothers cornered the silver market in 1979. We got here in 2011. Then JP Morgan took over the Bear Stearns silver book, as it was, the short position, as Bear Stearns went pear-shaped in the 2008 crisis. And JP Morgan have managed to accumulate somewhere in the region of 600 million ounces of physical silver, and I wonder why. So this is a no-brainer combined with the situation that we've got with the shutdown of the global economy, the printing of money on over time, and yeah, it's just a matter of hanging in there and waiting to see how it all plays out. So let's have a look at the stock markets for yesterday. We'll start off with the daily chart, and I'm just going to move some of these lines around so we can see where we are. So the market moved higher, but then sold off towards the close. Market back above the 76% retracement here, but I'm just going to clear these lines and let's just make it a bit easier to see. So we've got the fib we're looking for really is from this high to this high, and you can see the market is already on this on the overnight. So a close above the 24,392, and then we've got the 24,951, which also takes us back to more or less the high over here and yesterday's high as well. So let's just have a look at the overnight. Again, you can see that the price of the Dow is higher, and the reason is because they sold off towards the close of the session. So let's go into yesterday's pre-market, and again you can see we had some weakness, and then the market. So the high that we saw in the daily chart at the 76% retracement was put in the pre-market session. And then when we got into the main cash market, prices traded sideways and battled with the 200 MA, which you can see there. Again, we've got the classic 78% retracement, and the market double tops, triple tops, and then the reality of whatever happened here, probably the fact that Deutsche Bank released a report saying that the Fed could actually print 130 trillion if they were to buy equities. Well, they're buying everything else, so why couldn't they? And then the overnight, we see the prices pulling back and then moving higher. Coming back to that statement about the Fed buying equities, Japan have bought a lot of equities. I think it's 75% of the Japanese stock market now is owned by the Bank of Japan. Yeah, so like I say, as the insanity unfolds over the next few months, we can expect to see more of this, and you'll just see precious metals moving to the upside is the only safe haven. And as I said in the last video, if you go and have a look at the gold reserves, since 2010, all central banks have been buying gold by the ton and hoarding gold to the highest level since 1964. Anyway, news for today is the CPI for the UK, Bailey speaking, and we've got the FOMC minutes at 7 p.m. This evening. Nothing on rates, it's just the releasing of the minutes. It'll be interesting to see what Bailey's got to say, given his mate Sunak is in his prophecy mode at the moment of predicting that it's going to be a bad recession. I would replace recession with the greatest depression this country will have ever seen. It's going to be that bad. It has to be. When you lock up 3/4 of the Western world, then this is what you get. It's a no-brainer, really. Okay, that does it for this one. I don't think there's anything else to report. No, I think I've been through everything and covered everything. So, yeah, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.